Welcome back to Explain the Charts, your ultimate guide to deciphering market movements. Today, August 5th, 2025, we're putting the oddest currency pair under the microscope, analyzing both recent news and the granular details of its price action. First, let's look at the current sentiment surrounding AUDUSD as reported by major financial outlets. News sources like FX Street and Trading Economics indicate that the AUDUSD pair is currently hovering around the 0.6470 to 0.646 level. There's a strong bearish bias being highlighted on the daily chart, primarily driven by mounting expectations of an interest rate cut from the Reserve Bank of Australia. This anticipation is clearly dampening market sentiment for the Aussie dollar. However, interestingly, some reports, like from economies.com, suggest that the price is settling on strong gains and has breached a bearish correctional trend line in the short term. This presents a fascinating dichotomy, a long-term bearish outlook versus a potential short-term bullish reversal. We'll need to examine the charts closely to see which narrative holds more weight. Now, let's shift our focus to the one-day chart to understand the broader context of AUDUSD's movements. Looking at the period from March 2024 through August 2025, we can clearly identify a significant long-term downtrend. The pair has steadily declined from highs seen around the 0.69 level in late September 2024. We saw major drops in early October and again in mid-November of 2024, pushing prices from the 0.665 to 0.67 range down towards 0.64. A critical support level appears to be forming around the 0.64 mark, which has been tested multiple times in May, July, and most recently at the end of July and early August 2025. This level, marked by previous lows, acts as a psychological and technical floor for the price. On the flip side, we observe significant resistance in the 0.655 to 0.66 range, where price has repeatedly struggled to break higher. The area around 0.67 to 0.68 also served as strong resistance back in August and September of 2024, confirming the overall bearish pressure. The latest daily candle on August 4, 2025, closed at 0.64737, which aligns perfectly with the news reports of the pair trading around 0.646 to 0.647. This current level is very close to our identified 0.64 support zone, making it a pivotal area to watch. Let's zoom in on a specific period to highlight a notable reversal in price action on the daily chart. Here, we're looking at the dramatic decline and subsequent recovery from April 1st to April 15th, 2025. The sharp drop on April 4th from around 0.632 to 0.604 was particularly significant, marking a nearly 4.5% fall in a single day, possibly influenced by strong bearish catalysts not explicitly detailed in our news snippets, but perhaps related to broader market sentiment on the Aussie economy. However, what's crucial to note is the strong buying interest that emerged immediately after, leading to a significant rebound from the lows of 0.59289. This quick recovery, bringing the price back above 0.61 by April 9th, demonstrates underlying demand at lower levels, even amidst strong selling pressure. This type of V-shaped recovery suggests that while bearish news can trigger sharp declines, there's often immediate liquidity to prevent sustained capitulation, at least in the short term. Now, let's transition to the one-hour chart to gain a clearer perspective on the more recent, short-term trends from mid-July 2025. Over this period, we observe largely choppy, sideways movement, indicating a lack of strong directional conviction. Initially, there was a slight downward bias, with prices struggling to maintain gains above the 0.652 to 0.653 region, which acts as immediate resistance. However, as we move towards July 20th and 21st, there's a modest recovery, with the price moving from approximately 0.651 up towards 0.652. This aligns somewhat with the news mention of breaching a bearish correctional trend line on the short term, suggesting a tentative bullish push. For intraday traders, The 0.6495 level has proven to be a reliable short-term support, with bounces occurring whenever price approaches this area. The relatively low volume in some of these hourly candles also suggests that major institutional moves might be on hold, leading to this range-bound behavior. Finally, let's drill down to the 15-minute chart to analyze the immediate price action, focusing on the last few days up to August 4, 2025. Here, we can see the AUDUSD pair primarily consolidating within a tight range between 0.646 and 0.648. Despite the broader bearish sentiment from the news, the immediate price behavior shows relative stability. We observe small, contained rallies and pullbacks, indicating that neither buyers nor sellers are currently dominating the very short-term time frame. The current price point of 0.64737, as of the last candle on August 4th, sits right in the middle of this tight range. This suggests that while the market digests the fundamental news about potential rate cuts, it is finding temporary equilibrium at these levels. Breakouts from this 0.646 to 0.648 range on the 15-minute chart could signal the immediate direction for scalpers and short-term traders. So, what are the key takeaways for short-term and long-term trading decisions? For short-term traders, the 0.646 to 0.648 range on the 15-minute chart is critical. A break above 0.648 could see a quick move towards 0.65, while a break below 0.646 could target 0.642. In the medium term, on the 1-hour chart, immediate support is found near 0.6495, while 0.652 to 0.653 acts as resistance. A sustained move above 0.653 on the hourly chart could indicate that the short-term bullish trendline breach noted in the news is gaining traction. For long-term traders watching the daily chart, the overall bearish bias due to RBA rate cut expectations remains dominant. The major support at 0.64 is crucial. A definitive break below this level, especially with high volume, would strongly reinforce the bearish outlook and could lead to targets around 0.63 or even the April 2025 lows near 0.59. Conversely, a sustained push above the 0.655 to 0.66 resistance zone on the daily chart would challenge the long-term downtrend, making a reversal more likely. However, given the current fundamental backdrop, such a move is less likely, perhaps around 30% probability in the short term, unless new economic data out of Australia surprises positively. The likelihood of continuing the bearish bias towards 0.64 is higher, possibly 70%, especially if RBA rhetoric continues to hint at cuts. Traders should monitor RBA statements and Australian economic data releases closely, as these will be the primary drivers of any significant moves. Also, keep an eye on US dollar strength, as global risk sentiment often influences AUDUSD inversely. That's all for today's in-depth analysis of AUDUSD. Make sure to subscribe to Explain the Charts for more actionable insights and chart breakdowns. Happy trading, and we'll see you in the next video.